Good morning, traders. It's 8 a.m., believe it or not, starting right on the dot today, 8 a.m. Central Time on Monday, the 6th of June, 2016. Thanks for joining. It's another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount to cover this morning. Uh, the main thing being what's on the markets docket for today. The key element here is going to be the Fed Chair Yellen's talk to the World Affairs Council in Philadelphia at 12:30 Eastern, 11:30 Central. We want to watch out for that. Given the Friday's jobs report, which was way off, if you recall, um, we essentially went from having expectations of a Fed rate hike at 22% in June and 54.8% in July. So 22 and 54 over the next 2 months. Now the market with the Fed funds rate pricing, the market's expecting a 4% chance of a June rise and 58.5 by December. 58.5. So it went from 54.8, better than 50-50 chance that we would see a hike in July. And that chance moved all the way to December, 58.5. So, um, in addition to that, the Leave campaign, the Brexit Leave campaign is gaining momentum. The pound has had some pretty good movement there on that. It seems as we get closer to this June 23rd referendum date on whether Britain stays in the European Union or not, it seems like the Leave camp is gaining momentum. Currently, the Leave camp's at 45%, and the Remain camp is at 41%, according to the latest polls. But polls being as what they are, it's giving you just a rough guess, like looking at the weather 3 days from now. Um, the unemployment rate in China might be a lot higher than the country says. The jobless rate in China is really at 12.9% versus the roughly 4% that is being reported. So I think we're going to continue to see things out of China, and I think the volatility is going to continue, is likely to continue through the summer here. We're statistically due for a new high and a pullback, but we'll see how things look. As far as what we're expecting for today, nothing really outstanding. We did have Fed Speaker Rosengren overnight, and again we have Yellen at 12:30 Central, 12:30 Eastern, 11:30 Central. ECB Speaker Kerr at 8:45 Central, 9:45 Eastern, just 15 minutes after the open. And other than that, there's really not much on deck for the week, though. We do have a fair amount. Tomorrow, non-farm productivity in the U.S. We're looking for GDP in the Eurozone as well tomorrow at 5 Eastern. Government spending as well. Consumer credit at 3 o'clock Eastern. IBD tip economic optimism at 10. ECB's McCuch and not. Um, And then on Wednesday, we're looking for the JOLTS job openings. That has been a mover the last couple of times. That comes in at 9 Central. I'll stick with Central Time just to stop the confusion. Central Time is the CME exchange time. So the JOLTS job openings is at 9 Central on Wednesday. That could be a mover. And then on Thursday, we're looking for China's CPI. We're looking for German current account balance. We're looking for visible trade balance in the UK, and we're looking for wholesale inventories at 9 Central, wholesale trade sales, and household net worth. We're also getting Draghi on Thursday at 2 a.m. right at the cash open in Europe. Speaker Lycanen, ECB Speaker Lycanen, and ECB Speaker Villeroy all on Thursday. And on Friday, we're seeing CPI in Germany construction output in the UK, University of Michigan confidence prelim. This is the more volatile number at 9 Central on Friday, and then the monthly budget statement at 1 with ECB Speaker Weidemann and Constancio speaking. So there's a lot going on there. The week after that, though, the week after that's when we get the FOMC rate decision for June. We're getting that on June 15th. Okay, so that's how things are shaping up as we stand. Let's take a look at what we expected versus what we got. Here's the expectation for Friday. The overall, and if I scroll through this video here from Friday a little bit, so this is the primary hypothesis, a push down and then a push up, an attempt higher, push down, and the line in the sand was expected to be at 2098, as outlined here and as discussed in this video. I invite you to watch it. But the overall gist of the primary hypo is that. I drew this in during the trader bite, but essentially we're looking for a push down and then for the market to start climbing up. And again, I'm looking for the 2105 to be taken out at some point. 2105 quarterly all-time high in the futures, and that versus what we got, and here it is. An immediate push on the open. In fact, it's a little more clear on my trade trigger chart. Let's bring that in. So you can see here, immediate test of 2098 on the open, right on the dot, right there. 2098, push all the way down. It did push through the 87.25 here. I expected it to find some resistance, and it did slow down into it right here before it dropped off, came back in, a very short-term inverted head and shoulder, and started to go up. And then there we have it, the run up into the close. And that's the primary hypo, is to push down, find those buyers. Remember, in this area, buyers keep stepping back in. Find those buyers and push towards the all-time high. The high of the day was 2101.50. 2101.50. Didn't quite get to 2105 quarter. So hypo 1 was in play and worked out just fine. As far as what we're doing right now, I want you to watch what has happened since the 25th here. The 25th, we had our third gap zone up that's still open, and we have basically gone sideways. Let's send this to the back so you can see the bars in front of it. So you can see here the 25th gaps up and goes sideways. And let's watch right here. Let's watch how the volume is expanding in this area. So as I walk this profile forward, you can see that the market is really just expanding the existing volume. So you see that as we trade here, the existing volume keeps stepping up. We had some slight extension up, so far the value area is kind of stuck where it is, and then the value area shifts with this bar at the close. A fair amount of volume went off there, and yeah, the closing, the 2:45 to 3 o'clock central bar, but overall we're not shifting value at all. This market's been in complete balance, and as I wrote on Friday afternoon, as I tweeted out, the market has been in a mode of starting weak, the whole week, W-E-E-K, starting weak, W-E-A-K, and attempting to finish higher. So it starts lower, finishes higher, comes down, but it finishes the day higher, starts down, finishes the day higher, starts down, finishes the day higher, starts down, finishes the day higher. So overall, the market is finding those buyers, and it's holding on to this composite the composite, the micro composite. Sorry, my mind is just all over the place this morning. I didn't get to meditate. But the micro composite here, it's stuck in this volume here, and what this is telling us, by the way, is that value does not the market sees anything below this value low of the composite. Given how boxy it is, let's get rid of some of these scribbles. Given how boxy it is, the market is seeing anything below value low to be too cheap and is taking it back into value and through the other side before it finds participants on the other side. And so what this is doing, when you look at this profile, what this is doing is essentially compressing and consolidating and is likely to give us the energy. Just again, as I've described before, this is like a compressor, right? It's a compression. It's like a powder keg in a cannon. Um, the more we compress, the more the powder is getting packed together tighter and tighter and tighter, and the more that happens, the more likely the cannonball will shoot out with some strength. And today may be the day, with Yellen talking later this morning. So in either case, we have an awful lot of energy that is stored up in here, and currently the market's not letting go with the overnight low being so high into the week's low, this micro composite, and the market basically pushing the overnight high against the high of the composite here. So we are right up against, the overnight high is 2104 quarter. We're right up against that point away from the all-time high. So I've been talking about this all-time high getting taken over the last couple of weeks, and I wish it would just get it over with. As we zoom out here, let's get rid of this composite. As we zoom out here, I'd like you to focus on this composite right here and the number that I'm pointing at right there. This has essentially become, from the time we've been up here, this price has essentially become a key component of separating the highs and the lows. That number is 2080.75, 2080.75. If you don't have it marked in your charts, it's probably a good idea. 2080.75, 2080.75 is essentially what the sellers have to take over in order to target the next high volume node, the next low volume node, and to start working themselves to the big target of right down there, 2051 now on this big micro composite. So if we start to fall out and through these, if we push through this gap zone from last week or 2 weeks ago and start to fall out underneath, especially if we get into the tail here, 6950 colored in red, and I still have to update these flex levels this morning, by the way, the 6950. So the first shot across the bow for the buyers, for anybody who's long, to get out of the way is likely to be this 2080.75 being taken, which means that the gap zone is beginning to be taken. And once it does, then your last line of defense is likely to be the 6950 right here. If we take out the 6950, we're likely to go right down the flagpole and the target becomes 51. This sets us up for almost a swing short if that happens. That is the more exciting play. I would prefer to see that play than to see us push 2105 quarter and just keep bidding on low range and in a very, very disturbingly quiet way. So, which is what we do when we start to move up. But new highs are still expected given where we are, given that we are trading above this high volume node that we've been fighting here for a while. We're up here. We're likely to continue momentum upwards. So if you're short, take caution. Once we take out the high, I'm expecting the typical behavior of, as you can see here, I expect this to go through by a point or two or whatever, and then I expect buyers to just back off and then for it to pull back and start filling in these gap zones. This is a longer term perspective, maybe by the end of the week. Okay, I'll update for those who are looking at the flex levels on the chart. Again, flex levels are not something that you subscribe to. It's just an indicator that updates these updates these levels for you on a weekly basis. I just haven't had a chance to upload them. You'll see these numbers move around, these levels move around a little bit. But this morning, my expectations are for pretty quiet open. It is the Monday after non-farm payrolls. The overnight session was pretty dead until just this morning here, where we started to push up and break into a trending channel going upwards, and since then it's fairly even. Notice that the overnight point of control is in line with Friday's point of control, and the market's holding near highs. So right now the point of control underneath us at 2098, basically that 2098 level that we held on the open on Friday, is the over underline for this morning. As long as it stays above it, I'm looking for pullbacks to get long into 2105 quarter when I get a chance. The high we put in several nights ago, 2106. Overnight, that high does not count. It did not occur while the equities are open, so we're still considering 2105 and a quarter as the all-time high, even though it's taken over overnight. Starting to lose my voice again. So with that being said, the overall expectation for this morning is for the market to essentially, I'm expecting some, I'm expecting to open up. I'm expecting some responsive selling. I'm expecting it to push in here and make a lot of noise before it starts to walk itself up and to push this 2105. The key figure above the key figure above is right here, 2114. I'm not saying we'll get there today, but 2114 is a double measured move target from two distinctly different swings, 2104, 2114.50. But this is hypo 1 here. I'm expecting the pullback, find the buyers, and start to move up. Classic move for the market right now. Hypo 2 looks to just complete the move upwards in the overnight, tag that, and then start to move back down and then balance for the session. That's hypo 2. But again, as usual, traditionally the NFP, the Monday after unemployment and non-farm payrolls, is a fairly quiet one. So look for that. In either case, just sit back, let the market decide what it wants to do, and then trade from the position of strength. I want to keep reminding you that your job is to just simply identify which side is likely to push for a continuation and to ride that continuation into profitability, hopefully. So that's it. That's all I had for you. I want to remind everyone tomorrow, I'm going to be speaking on Futures IO. I'm offering a 4-part mini series based on a survey that was done. It's a trader education series. It'll be open to everyone to watch. Look for the link for that on Twitter and in tomorrow's video. So join us for that. Again, it's sponsored by Futures IO. It happens at 3:30 Central, 4:30 Eastern, and the discussion is going to be about trading techniques. So we'll cover that tomorrow, and it'll be about an hour and a half as usual. Good luck, and I'll catch you tomorrow. Take care.